The nation's largest used car retailer has just made a shocking announcement, one that could change the way you buy cars forever. Here's the deal, Carmax's latest financial report reveals a massive crisis unfolding behind the scenes. Loan defaults are surging, used car values are plummeting, and the company is scrambling to stay afloat. But here's the real shocker, this isn't just about Carmax, this could be the first domino in a total collapse of the used car market. So what does this mean for you? Should you avoid buying a used car right now? Are we about to see the best deals in years? Or a financial disaster for millions of car owners? Stick with me, because I am breaking down everything you need to know. And trust me, this is a warning you can't afford to ignore. What's happening? Carmax just dropped a bombshell that is sending shockwaves through the auto industry. The nation's largest used car retailer has issued a grim warning, revealing financial struggles that go beyond its own business and could be an ominous sign for the entire economy. For years, Carmax has dominated the used car market with its no-haggle pricing and massive selection, making it the go-to destination for buyers looking for a stress-free experience. But their latest earnings report has raised serious red flags. Buried in the financial disclosures is a number that cannot be ignored, a staggering increase in loan loss provisions that signals a growing crisis in auto lending. So what exactly does this mean? In simple terms, Carmax is bracing for a wave of auto loan defaults. Their latest report shows that they have set aside a massive $112.6 million to cover anticipated loan losses. That is a huge increase from the $89.8 million allocated just 1 year ago. A sharp rise like this suggests that more and more customers are struggling to make their car payments, and Carmax is expecting that problem to get even worse. But Carmax's struggles did not happen overnight. They are the result of a perfect storm of economic factors that have been building for years. The real reason Carmax is struggling. At first glance, Carmax appears to be a thriving business. They have built a reputation for making car buying simple, transparent, and stress-free, but underneath that polished image, cracks are starting to show. And they all lead back to one major problem. Their business model is collapsing under the weight of the current economy. For decades, Carmax's biggest strength has been its ability to finance its own customers. By offering loans directly to buyers, they have been able to control the entire sales process, making it easy for customers to get approved and drive off the lot. But that strategy comes with a major risk. If customers stop paying their loans, Carmax is the one holding the bag. And that is exactly what is happening. As interest rates have skyrocketed over the past 2 years, car payments have become unaffordable for millions of Americans. The average interest rate on a used car loan has climbed to nearly 10%, and monthly payments have hit record highs. Many buyers who took out loans just last year are now struggling to keep up with payments, forcing Carmax to brace for a surge in defaults and repossessions. At the same time, Carmax's no-haggle pricing model, which was once a selling point, is now backfiring. Unlike traditional dealerships that can negotiate prices to move slow-selling cars, Carmax's fixed pricing means they are stuck with overpriced inventory that no one wants to buy. With car prices dropping and buyers growing more cautious, CarMax is in a dangerous position. They are sitting on thousands of vehicles they bought at inflated prices during the pandemic, and now they are struggling to sell them at a profit. But the biggest red flag in this crisis is not just about car prices, it is about the rising wave of auto loan delinquencies that could shake the entire economy. The auto loan crisis that no one is talking about. Most people assume that if you finance a car, you will pay it off, but right now, that is not happening. A historic number of buyers are falling behind on their car loans, and CarMax is feeling the impact. Auto loan delinquencies have surged to their highest levels in over a decade, and the trend is accelerating. More than 7% of subprime borrowers, those with the lowest credit scores, are now at least 60 days behind on their payments. That number is even worse than the peak of the 28 financial crisis. So why is this happening? The answer comes down to a combination of bad lending practices, economic pressure, and skyrocketing interest rates. For years, lenders, including CarMax, offered longer loan terms and higher risk financing to get more people into cars. But now, with inflation squeezing household budgets, many of these borrowers simply cannot afford their payments anymore. This is a huge problem for CarMax because their entire business model relies on financing risky borrowers. When defaults rise, CarMax is forced to repossess cars. But here's the problem. Those repossessed cars are not worth what they were originally financed for. As used car values fall, CarMax is getting less money back when reselling these vehicles, leading to massive losses. And this is just the beginning. Experts predict that auto loan delinquencies will continue rising, especially as economic uncertainty grows. If that happens, Carmax's financial losses will only deepen, and they will have no choice but to change their entire approach to lending. But the auto loan crisis is only part of the equation. The real financial disaster is unfolding in used car prices. Why used car prices are about to collapse. If you bought a used car in the past 3 years, chances are you paid a premium. Thanks to supply chain disruptions and record demand, used car prices hit all-time highs, with some vehicles selling for more than their original sticker price. But that era is officially over, and used car values are now falling fast. Over the past 6 months, used car prices have dropped significantly, with some models losing thousands of dollars in value in just a short period. Experts say this trend is only accelerating, as higher interest rates and increased new car production flood the market with inventory. For Carmax, this is a nightmare scenario. They are stuck with overpriced cars that they bought when the market was at its peak. Every week that passes, these cars lose value, and Carmax is forced to either take a loss or hold on to them longer, hoping for prices to rebound. This is why Carmax's recent announcement is so alarming. Their financial struggles are not just a company issue, they are a clear warning sign that the entire used car market is headed for a major correction. But the biggest question remains, what does this all mean for the average car buyer? The buying opportunity no one saw coming. For months, car buyers have been waiting on the sidelines, unsure of whether prices would ever come back down to earth. Well, the wait is over, because for the first time in years, the power is finally shifting back to the buyer. Carmax's struggles, combined with rising interest rates and falling used car values, have created a rare buying opportunity. As dealerships struggle to offload inventory, buyers are now in a stronger negotiating position than ever before, and the deals are only getting better. Many dealerships are now offering steep discounts, lower interest rates, and longer financing terms just to move vehicles off the lot. Carmax in particular is quietly cutting prices across many of its locations, hoping to attract hesitant buyers before their financial situation worsens. But here is the key, not all deals are created equal. While some vehicles are now selling for thousands less than they were just a year ago, others still have room to fall. Understanding which vehicles to target and when to buy will be critical in taking advantage of this shift. For those in the market for a car, patience is now a valuable strategy. Prices are continuing to drop, and as Carmax and other dealerships become more desperate to make sales, buyers who wait just a little longer could score the best deals of the decade. But before you rush out to buy, there is one more thing you need to know, because Carmax's struggles could be leading to something even bigger than a price drop. The ripple effect. Carmax's financial troubles are no longer just about the company itself. They are sending shockwaves throughout the entire automotive industry. What started as a decline in used car sales has now turned into a full-scale crisis that could push automakers, lenders, and even manufacturing workers into economic turmoil. One of the biggest reasons for concern is the collapse of used car prices. Carmax is a major player in the industry, and as they begin to cut prices to move inventory, other dealers are being forced to follow suit. This has created a chain reaction of price reductions, which, while great for buyers, is devastating for businesses that overpaid for inventory in the past 2 years. For automakers, this price collapse is a serious warning sign. Many rely on the used car market to support new car sales, as higher trade-in values encourage people to upgrade. But with used car prices falling fast, trade-in values are shrinking, making it harder for buyers to afford a new vehicle. This is already leading to a slowdown in new car sales, which could result in factory shutdowns and job losses in the near future. Even more alarming is the impact on auto lenders. As Carmax's loan default rates climb, banks and financial institutions are seeing higher losses on auto loans, forcing them to tighten lending standards. That means fewer people will qualify for financing, leading to even lower car sales and a potential economic downturn in the automotive sector. If this cycle continues, the effects could spill into the broader economy. The auto industry is a major driver of economic growth, employing millions of people across manufacturing, sales, finance, and transportation. If sales continue to plummet, layoffs could follow, creating a ripple effect that spreads into other industries like retail, construction, and hospitality. But as the industry braces for an economic slowdown, there is another surprising consequence unfolding. Insurance companies are being hit hard by Carmax's crisis as well. well. The insurance fallout. Most people think of used car prices and insurance costs as separate issues, but in reality, they are deeply connected. As Carmax struggles to sell vehicles and used car values continue to plummet, insurance companies are being forced to reassess how they calculate premiums and payouts, and the results could hurt consumers in unexpected ways. One of the biggest concerns for insurance companies is the rising rate of total loss claims. Typically, when a car is involved in an accident, insurers compare the repair cost to the vehicle's current market value to determine if it should be fixed or declared a total loss. But with used car prices falling so rapidly, many vehicles that would have been repaired just months ago are now being written off as total losses. For consumers, this can be devastating. If your car is declared a total loss, you might expect your insurer to cut you a check for what you paid or what you owe on your loan. But in reality, most insurance policies only pay out the car's current market value, which could be far lower than what you owe on your auto loan. This is especially bad news for Carmax customers who finance their vehicles at peak market prices. Many are now underwater on their loans, meaning they owe more than their car is worth. If their car is totaled, they could end up stuck with thousands of dollars in unpaid debt, even after insurance pays out. At the same time, insurance companies are facing huge financial losses due to the declining resale value of vehicles. When insurers write off a car, they try to recoup some of the cost by selling it at auction. But with the market collapsing, these auctions are fetching lower and lower prices, meaning insurers are losing more money per claim than ever before. This could lead to higher insurance premiums for everyone as companies raise rates to cover their losses. That means even if you are not buying a used car, Carmax's crisis could still end up costing you money every time you pay your insurance bill. But the insurance fallout is just one part of the story. Carmax's troubles are also exposing a much bigger issue with America's car supply chain: the supply chain breakdown. Carmax's latest struggles are not just a sign of a weakening used car market, they are also exposing a major problem in America's vehicle supply chain that could have long-term consequences for both new and used car buyers. For years, automakers and dealerships have relied on a steady flow of used cars to keep the market balanced. When new car production slowed during the pandemic, Carmax and other used car retailers stepped in to fill the gap, driving up prices in the process. But now that used car prices are collapsing, manufacturers are scrambling to adjust their production plans, and it is not going well. One of the biggest issues is the unpredictability of demand. Just last year, buyers were willing to pay nearly anything for a new or used car. Now, demand has plummeted, leaving automakers uncertain about how many vehicles they should be producing. If they cut production too much, they risk future shortages and lost revenue. But if they keep production too high, they could end up flooding the market with cars that no one can afford, which is exactly what happened in the used car sector. This uncertainty is especially dangerous because of how long it takes to adjust auto manufacturing supply chains. Unlike other industries, where production can be quickly ramped up or slowed down, automakers operate on long timelines, with vehicles often taking months or even years to move from planning to production. That means the decisions being made today, based on the assumption that demand will continue to fall, could lead to major inventory shortages just a few years down the road. At the same time, automakers are still struggling with supply chain issues, including shortages of key components like semiconductors. If production cuts continue, suppliers may start scaling back their own operations, which could make it even harder for the industry to recover when demand eventually rebounds. The result? A car market that is more unpredictable than ever, making it harder for buyers to find the right vehicle at the right price. This erosion of trust is not just a problem for Carmax, it is spreading across the entire auto industry. After years of price hikes, markups, and questionable sales tactics, buyers are more skeptical than ever, and if dealerships and automakers cannot rebuild that trust, the future of car buying could look very different in the years ahead. But Carmax is not done yet, and the company is fighting back. Carmax's desperate comeback. Carmax is in trouble, and they know it. With plummeting used car prices, rising loan defaults, and a growing consumer trust crisis, the company is scrambling to find a way back to stability. But the big question is, can Carmax turn this around, or is it too late? In an effort to regain momentum, Carmax has started implementing a series of aggressive strategies, hoping to win back customers and protect its bottom line. One of the most noticeable changes is a shift in its pricing strategy. For years, Carmax was known for its no-haggle approach, offering a fixed price that buyers could either take or leave. But now, the company is experimenting with more flexible pricing models, introducing special discounts, trade-in bonuses, and limited-time offers to incentivize hesitant buyers. Carmax's desperate comeback. Carmax is in trouble, and they know it. With plummeting used car prices, rising loan defaults, and a growing consumer trust crisis, the company is scrambling to find a way back to stability. But the big question is, can Carmax turn this around, or is it too late? In an effort to regain momentum, Carmax has started implementing a series of aggressive strategies, hoping to win back customers and protect its bottom line. One of the most noticeable changes is a shift in its pricing strategy. For years, Carmax was known for its no-haggle approach, offering a fixed price that buyers could either take or leave. But now, the company is experimenting with more flexible pricing models, introducing special discounts, trade-in bonuses, and limited-time offers to incentivize hesitant buyers. Carmax has also loosened its financing terms to attract more customers, offering longer loan terms and lower initial payments to make its vehicles appear more affordable. However, this approach carries a massive risk. If buyers are still struggling financially, extending loan terms could only delay the inevitable wave of defaults, worsening Carmax's financial situation. Additionally, the company is investing heavily in digital sales and online financing, attempting to compete with platforms like Carvana. By streamlining the online buying process, Carmax is hoping to attract tech-savvy consumers who prefer a seamless, hassle-free experience. But even beyond pricing and financing, Carmax is facing another major challenge: inventory management. The company is sitting on a massive stockpile of used cars that were purchased at peak pandemic prices. Now that values are dropping, selling these vehicles without taking huge losses is nearly impossible. If Carmax can't offload its inventory quickly enough, it may face even greater financial strain. Is this enough to reverse Carmax's downward trajectory? Some analysts believe these changes are too little, too late, as the company is still dealing with mounting inventory issues and an overall slowdown in used car demand. But even if Carmax does manage to stabilize, there's a much bigger question looming. Has the used car market changed forever? A permanent shift or temporary slump? Carmax's struggles are just one piece of a much larger transformation happening in the used car market. For decades, buying a used vehicle was considered a smart financial move, offering buyers the ability to get a reliable car at a fraction of the cost of a new one. But now, things are changing fast. One of the biggest factors driving this shift is the rapid depreciation of used car values. During the pandemic, used car prices skyrocketed, with some vehicles selling for more than their original sticker price. But now that demand has cooled, values are dropping just as quickly, leaving both dealers and consumers scrambling. Another key issue is the rise of leasing and subscription-based car ownership models. More consumers are moving away from traditional car buying, instead opting for short-term leasing programs or monthly car subscription services that allow them to switch vehicles regularly without long-term commitments. This trend could spell disaster for used car dealers like Carmax, as fewer people look to purchase vehicles outright. On top of that, electric vehicles are reshaping the used car market in unexpected ways. While demand for new EVs is still growing, the resale market for used electric cars is much weaker, as buyers worry about battery degradation, limited charging infrastructure, and rapid technological advancements that make older models less desirable. This has forced Carmax to rethink how it values and markets EVs, adding another layer of complexity to its ongoing struggles. At the same time, rising interest rates have made financing a used vehicle more expensive, discouraging buyers who might have otherwise considered purchasing a pre-owned car. Monthly payments on used cars have climbed to levels that rival new car financing, making leasing or waiting for further price drops more attractive. Additionally, online competitors like Carvana and Vroom are disrupting the industry, offering seamless digital purchasing experiences that traditional dealers struggle to match. With so many factors at play, some experts believe the used car market will never return to what it once was, meaning companies like Carmax must evolve or risk becoming obsolete. But the biggest challenge Carmax faces isn't just market trends, it's the growing public distrust in used car dealers altogether. Stories of hidden fees, misleading financing terms, and overpriced vehicles have damaged the industry's reputation. If Carmax wants to survive, it must find a way to regain consumer confidence while adapting to an increasingly uncertain future. Rebuilding trust. Over the past few years, the auto industry has burned a lot of bridges with consumers. From pandemic-era price gouging to aggressive financing tactics, many buyers feel like they've been taken advantage of. and they're not quick to forgive. Carmax, once seen as a more trustworthy alternative to traditional dealerships, is now lumped in with the rest of the industry. To counteract this trust crisis, Carmax is making a massive PR push to win back skeptical buyers. The company is emphasizing its customer-friendly policies, such as 7-day return windows and extended warranties, to reassure hesitant consumers. It is also investing in more transparent pricing tools, allowing buyers to see a detailed breakdown of how their vehicle's price is calculated, a move designed to combat the perception of hidden fees and markups. Carmax is also working to improve the customer experience, shifting its focus toward more personalized service and better financing education. Instead of pushing customers into high-interest loans, the company is training its sales team to offer more tailored advice based on the buyer's financial situation. Additionally, Carmax is leaning into digital transformation. More customers prefer to browse, finance, and even complete their purchases online rather than visiting a dealership. To keep up, Carmax is expanding its online presence, allowing buyers to complete most, if not all, of the car buying process from home. However, rebuilding trust takes time, and for many consumers, the damage is already done. Younger buyers in particular are gravitating toward brands that offer seamless, hassle-free transactions without dealership involvement. If Carmax fails to modernize quickly enough, it risks losing relevance in a market that increasingly favors direct-to-consumer sales. The real test will be whether Carmax's actions match its promises, or if it will continue to struggle with the same reputation issues that have plagued dealerships for years. But even if Carmax manages to recover, there's one final challenge that could reshape its future: the rise of direct-to-consumer car sales. The death of traditional dealerships? Carmax's business model is built on one key assumption: that people will always want to buy their cars from a dealer. But what if that's no longer true? With major automakers like Tesla, Rivian, and even Ford exploring direct-to-consumer sales models, the future of car buying could look completely different in the next decade. Instead of going through a dealer, buyers could simply order their vehicles online, customize them to their liking, and have them delivered straight to their doorstep. This shift could spell disaster for companies like CarMax, which rely on the traditional dealership model to sell vehicles. If more consumers start buying directly from automakers, used car dealerships could see a massive decline in foot traffic and sales. In response, CarMax is exploring new ways to stay relevant, including expanding its certified pre-owned program and partnering with automakers to offer trade-in services for new vehicle purchases. But the question remains, is CarMax adapting fast enough, or is it fighting a losing battle? Carmax's struggles are a warning sign for the entire auto industry. From falling used car values to rising loan defaults and shifting consumer preferences, the market is changing faster than ever before. If you are thinking about buying a used car, you need to be more careful than ever. Beyond competition from direct-to-consumer models, Carmax faces another challenge: declining affordability. With high interest rates and stricter lending criteria, many potential buyers are delaying car purchases or opting for cheaper alternatives. This shift further pressures used car dealerships, which have long thrived on financing deals and trade-ins. Another issue is inventory. During the pandemic, used car prices soared due to supply chain disruptions. Now, as supply stabilizes, prices are dropping, reducing Carmax's profit margins. The company must find a way to stay competitive while navigating this volatile market. So now we want to hear from you. What do you think about CarMax's current situation? Have you ever had an experience with them, good or bad? Do you think the used car market will ever return to normal? Well, drop your thoughts in the comments below and let's talk about it. If you found this video informative, hit that like button, subscribe, and stay tuned for more updates on the car market.